Hello folks, I'm L.A. Little and this is your weekly TA wrap. Well, we take a look at these markets and we do it from a neoclassical perspective and ask ourselves what happened last week and what does it tell us about the coming one. You know, I do the show once a week every Sunday night live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains, especially the snow-capped Rocky Mountains. Folks, I'm glad you could join me. It is a lovely evening, Thanksgiving week, short week. We all have something to give thanks for, I'm sure. I know I do. Just being here and breathing is something to give thanks for, I believe. But there's much more than that. You know, people helping people out. You know, a lot of people not doing as well as most of us, or a lot of us. So it's always a time to reflect. This time of the year, hopefully you're doing that as well as I. What happened with these markets? Well, we got breakouts galore. They just keep rising, and if we look at the indexes here, what we're going to see is that they have moved higher. Again, breakouts right across the board. Let me get this down so that we can look at the charts. And we'll leave it on the weekly and view it that way. So let's pop over and see what kind of action we got here. So, all right, so on the weekly, right, still going straight up. There's really nothing, you know, if you draw those channels like the classical guys, you probably got a channel sitting there and so forth. But the main thing here is, even though the volume's not there, right, we had volume going up, now it's tailing off. Well, it's that time of the year, and volume does tail off this time of the year. The main thing is you got a breakout on this time frame. That breakout took place here, and since then price has moved higher. That's all you need to know on that time frame, and until that stops, price is going to continue to move higher, and that's the way it's trading and the way it wants to trade. If I look over at the daily, right, we just got another break, a break above these highs. So you got a new high, if I can get that drawn on there, a new high. We remember we were talking about ABCD structures potentially setting up, nested inside the larger ABCD structure, and that's in fact what has taken place now. Measurement up here is about 1860. This one's about 1820. 40 points still to go if in fact we even reach this one. That's looking like what it's trying to do. Again, nothing here special with volume, but you know it doesn't matter. You got a breakout. You never did get the retest regen here. Never got quite back far enough to do it. We got it on the weaker sectors and we got it on the weaker indexes, but we didn't get it here on the S&P. This S&P just looks to me like it wants to push on up there and reach the next target. If I look at the Dow's already busted out. It busted out before everybody else. This is where the juice has been. The Dow has a nice big ABCD structure. The weekly breakout here, that's 2 bars back, breakout here, quite a ways back, and it's been so strong it never even got a secondary setup to go higher. But you've got ABCD structures here just like you got them everywhere else, and those structures are in place. I mean, we've got one here, right, that's already doing its thing, and we've got another one nested within it, and I won't draw the whole one out, but you can see what's happening here. So the strongest 2 indexes continue to be the strongest ones. I don't see anything in these charts to tell me to think otherwise. And you know, until I see something that tells me to think otherwise, I'm not going to. So the only index that hasn't broken yet is the NDX, the NASDAQ. Top here is 34.29. We're at 34.22 on the close. We got as high as 34.22. We closed right at the highs. 7 points away. NDX looks great here on the weekly. This range that has been in effect now looks to me like they're going to try to break out of this one. That range has essentially been really there's kind of 2 ranges that look to me that are going on. One range is this area. If you put kind of a same size on top of it, you have another one that's going to be up there. If you take and draw ABCD structure potential inside this one that's here, that is going to take you right about to that area, which is the top of that range. So I would think that the index, NDX, is going to try to do the same sort of thing and follow everybody else up. We're going to get to the Russell in a minute. The Russell did that on Friday. This is the one that's lagging and still trying to get there. If we look over, and honestly, Friday was interesting. You had 4 out of the 5 largest NDX weightings. Apple, Microsoft, Google, I believe Oracle, and Intel. 4 of the 5 were down. Not huge, but down. Intel was down big. Intel was down 5.5%. Because they told us they weren't going to make the money that, you know, a few short weeks ago we thought they were going to make. And remember, Intel disappointed last quarter on earnings as well. So Intel, to me, is one of those warning signs you got to keep watching. Now, Intel, of course, is in a industry / sector that isn't moving very much. I should say that large chip maker, right? If you only really got 2, AMD and Intel, and then overseas, I can't think of the name of it, but you have one there. So that, you know, those big mega chip makers are struggling to increase their margins and increase their sales. Now you are seeing specialized chip makers like an LLTC or some of the others. Some are struggling, some aren't. MU, for example, has a great chart going on. That's a memory chip. It just depends on where you're at inside that. You can't group them all together, but Intel definitely having problems. Here's the IXIC. This is the NASDAQ composite, which is broader. 39.94, closed at 39.99, so it's over. It's already got the ABCD structure going here that we've seen elsewhere. So here again, ABCD up. So the NDX is the only one to follow, or still has to follow. And those structures, like everything else, are nested within the larger ones that are out there. And it looks to me like, you know, you go to this one first, you get some sort of a pullback, and you try to do it again into the end of the year. That's the way these are all setting up. Russell finally breaks. Now the Russell was a very worrisome chart to me because, you know, if you can't get the small caps moving, that's a problem. Now, you just barely got over the highs here. You can see the trend transition here with the red, suspect, not enough volume as compared to the highs. But you got over them, you set up another. Actually, the ABCD here was already completed. And then you got a deeper one, so there's a little small one. It's not very large. But it needs to pull away a little bit here to tell us that, in fact, this thing's going to keep going. So This will be one you need to watch, right? It's one to put a check mark on or not, depending on what it does. One to watch along with the NDX. Those are the two that are struggling the most. Sector-wise, strong. I don't really see anything in the sectors that are worrisome. And a matter of fact, if we go, well, I should take that back. The semis are struggling. But if I look at the strong sectors, the ones that can carry this market, the biggest one is XLF, right? So the XLF has a large ABCD structure, just like everything else we're looking at, takes it up to around 20. Inside that, you've had multiple, and this is what I think the rest of the market's going to keep doing, you've had multiple ABCD structures form and are trying to complete. I would think there would be one more to get you to the top and get you to the 20 area, another 2%, 2.5% higher. The whole market keeps gravitating up. And if you think about the calendar, it's very hard to get bearish. I mean, what's going to stop this thing from just percolating up into the end of the year? That's typically what happens anyway. And given how strong this year has been, it's kind of hard to think of anything else. So XLF, one of the largest sectors, it's got a nice big structure going on the way up. I do want to point out one other thing while we're looking here, and that is when you get, when you look at these charts, I mean, this has been a phenomenal year. You've got nothing but swing point lows all the way up, right? No breaks. No breaks whatsoever. That's unusual. I mean, that's not normal, right? And when you see this kind of behavior, you know two things. One, it's a very strong market. I mean, it's hard to think anything beside strong, strength. A lot of strength all the way up. There's just nothing here that's stopping this. And we're looking on a weekly. You can go to almost any weekly chart and you're going to see this when you're looking at indexes or you're looking at the sectors, right? That's unusual. The other piece of it is, even though it's strong, what it's telling you is that the MTTF, if you think about it, the mean time to failure is getting extremely stretched. That's true here. That's true on the long term too. If we pull over this and look at it, this has the same sort of behavior. Of course, here on the long term, you're not going to see as many of those, right? Because they take a lot firmer. We're talking about longer. We're talking about months here. There's another one about to print up here. These are also extended. They're extended in the sense that they have not transitioned for quite a while. Now the XLF is a little different. If we pulled back and put up, like let's say the IYT, and we look at the IYT, here you're going to see, well, you're not going to be able to see it with my with those in place. Let me get these off right quick. If we pull it up though now, and so we cleaned it up, you can see here, right? This has been going on a very long time, right? Trend transitions here, there, it just continues up. That's not normally the case. Of course, it's not normal that we have a Federal Reserve that is resorting to what we now affinitively call QE, right? This quantitative easing. And not only do we have a Federal Reserve doing it, we have central banks around the world doing it. And that, folks, really is what's going on. I showed a chart last week, I think last Thursday. It was actually an interesting chart. But, this party will end at some point. And you're going to have to be able to tell when that point comes. You need a mechanism to tell you that. One of the things I don't think that's nearly appreciated enough is the whole idea in neoclassical, and that is, here I'm looking at the IYT on the weekly now. As the market moves higher and these swing point lows print, what happens is they give you an early warning system of when the market's going to turn. Let's just say another one prints up here. If it does, when we finally get the break, right? What does that do? That transitions trend on an intermediate term time frame. The market can't roll over until you get changes of trend here and here. When you get it here, and in particular, if you get it to turn bearish, that's when you can finally get a rollover. And the fact that these swing point lows just nestle up underneath this as it moves up gives you an early warning system of when that's going to happen. And a lot of systems, a lot of charting systems, a lot of the classical stuff just doesn't give you that, right? It'll give you a breakdown, show you head and shoulders, whatever, but those just give you measurements to move to something else. It's very hard to tell when the trend truly has transition, and I know that for a fact because when I wrote my second book, one of the first things I had to do was define trend because it really hadn't been defined. Neoclassical gives you that, and you have to watch it, and you use it as your early warning system. If you want to be very tight, then you watch the daily as well to give you an ability to conclude or to conclude that this one may do the same. You know, what you're always wanting to know is how risky do you want to be and how risky you don't want to be. And by watching trend and by having these swing points nestle up underneath here, you can know when you need to get safer. And that's important. It's very important. When this market turns, and it will, and you see 15-20% declines, you don't want to be on the wrong side of the trade, or you're simply going to give back everything you gained. I don't know. I'm going to look at the semiconductors here. This is the only one that's really struggling. But when I say really struggling, I mean it's kind of a misnomer, right? Because you have kind of two ranges going on here as well, and even though it's still, in the top part, right, it's still struggling. But look at it over here on a weekly. I mean, it just looks like it's taking a little rest, right? And if that's all we can get in terms of a struggle with respect to this market, it's going to be very hard to see anything turn down. And I want to show you one other thing while we're here. These two swing point lows are very close. The dividing line between them is not much. And let me actually take that off and draw in the lines now. And so one of the things you're always watching for is when are we going to see that deterioration, right, that comes eventually. This area is a key area. If you break it, right, then you can get a faster move. And not only that, you've got two more sitting down here. Now the one prior to this was already broken on this one, so it's really just this one. But this swing point low, if you take the measurement of it, that's 39.10, which is this one. So what you can see now, you could get a fast move through here that takes you into that one and potentially breaks on 2 time frames, which would move you even deeper. It's an important index, an important sector. This is definitely one to watch. Let's go over and look at the ox markets and see if anything's happening over there. Last week we had a big breakdown in gold. Let's take a look at the metals and let's see what the bonds and the dollar's doing. So let's start with, and actually let's look at oil, because tonight we saw a deal come out of Iran where they're going to give up their quote-unquote fission material or nuclear material that is bomb-making material in exchange for the West easing the sanctions, which will allow them to recoup about $1 billion a month over the next half year, which, believe me, they desperately need. I happen to have an inside view of that, given that my wife is from that country, and we actually hear a lot about it. So oil, now it's fascinating here, because remember, oil was testing and testing and testing. What I think you're going to see is you're going to see it test again, potentially off this news. If it doesn't, that's a clear indication that it's probably put in its bottom and it actually wants to go up and do the swing point low retest regen, which would be this area. So oil will give you a nice big confirmation of a reversal that wants to go higher, right, short term, if in fact it cannot break down tomorrow. Brent crude will be hit harder than the West Texas Intermediate, which is what the USO is based on. But still, this should break lower if in fact it's going to do so. If it doesn't, it's a fairly clear indication that this market's washed out near term. Let's look at the dollar. The dollar, you remember the dollar had a big bounce on Wednesday, and they gave up almost all of it, and now we're back to testing again. 120, let me see, 21.73, closed right at it. So tomorrow is going to be the kind of the defining day here for dollar one more time. So is the dollar actually going to hold these big important areas, or is it going to break down again? And that area right there is the key area, and it's sitting right on top of it. So tomorrow will give us a good feel for dollar strength or weakness. FXE back the other way. A huge bar down, didn't matter. It's right back up testing again. It's testing these highs. Same thing as we're seeing on the dollar. And if that has any impact on gold, you hadn't been able to tell it, because gold, despite the strength in the FXE, this was the big day down on the FXE, which was November 20th, and then gold could not get a pushback up off of that. Notice how the volumes, as you keep breaking, keep becoming, or they're becoming less and less volume as they break. Sometimes it's an indication that you're just washed out. So this didn't have 6 on it, so the low is over here. Yeah, so boy, I tell you, I don't see anything positive in this chart. It looks to me like, just given the way it's trading, that the best you can hope for is for a retest regen that actually can't regenerate lower, and that would be off of this bar. But believe me, there's plenty of levels of resistance on the way up now. You've got them here, there, multiple. So it's going to be tough to get back up through this. And I don't see anything. And you actually had some volume down here when you left the lows. So more than likely, it's going to, even if it gets the bounce, it's probably going to fail here and then work back down the other way. All right, try to go back down and hit this area. Not a pretty picture if you're in gold. Let's see. I assume silver sells is the same thing. Yeah, and it's still worse. So that also looks like it wants to go see the lows. Let's see what the bonds are doing. And so the bonds came down hard. They held. Yeah, I still, I've been talking, it's been a while now, but I've been talking about a bottom being put in down here. And it sure feels like it, and it sure trades like it. Just look at this big, wide price spread, high volume, and what does it do? It immediately comes back off of it. And it got the break. 1, 2, 3, 4, 5, 6. Got the break of the low, confirmed, and it still bounces hard. And the retest regen, it's already over it. This certainly looks like, bonds just do not want to sell down yet. In time, but not yet. All right, let's see if we got any questions out here. I don't see any on the boards. Let me see what's in the pipe over here or on text messages. So nothing in the email. Wow, we're in holiday mode. Nobody wants to ask questions. Let's pop over then, since I have a few minutes, and let me look at the foreign markets, because I don't get to look at them very often. So let's take a quick look at the world markets and see what they look like. Let's start with France. and see what France is up to. So still consolidation at the top. This looks like our semi chart we just looked at, right? Nice big consolidation here, right at the top, right? And you can see it all across here. That high volume was this high, still hasn't been tested. So that's still hanging out there looking for a test. That looks positive for that chart still. FTSE. The FTSEs have metals, a lot of metals, and so they always get drugged down when the metals do. They never got to the high. Yeah, so now they're coming back. The FTSE looks like it's going to hold here, though. It's coming back into this bar that has the volume, right? Right there. It's right into it. So swing point high has been tested, retested multiple times, so it's really support. Support is in this area, and that's where all the volume was. This is not the kind of volume bars I like, though, given that they were sell bars, so that doesn't give me a lot of faith in them, but that's the area to test. This definitely still is the weakest one, and that's primarily because of the metals. The DAX right at the highs. So you can see how strong the DAX is compared to everything else. Now it's up there testing, and boy, this has been a run and a half. You know, this is straight up. This has an ABCD structure. It looks like it already completed on the weekly, and on the daily, it's tested the highs and still testing them. So it gets over it, changes trend, but can't, or actually just reconfirms, but it reconfirms suspect, so it does an immediate retest regen. I could bring it back as low as the bottom of the bar, but this is definitely the strongest market in that region. Let me look at the other Asia real quick. So the All Ordinaries getting a bounce. Yeah, that still looks fine. Hong Kong, let's see what that one looks like. Going for the highs again. Hong Kong had a huge move this week. FXI is a pretty good tracker of that. Nice big spike up. The Nikkei, this thing's been up 1% a day for like 10 days. Remember, I've been talking for a long time that this high was going to get tested. Well, here we go. We're over the swing point highs. There's your high. It's going back to test it. It's amazing how it does those things, but it just does it. Once it gets close enough, it gets magnetized towards it. Taiwan, this is chip country, so it's a reflection of chips in my mind. I still can't get anything going there. And I want to quickly look at Brazil, because Brazil has been struggling and still is. So, nothing there. Question, do you think the KRE breakout is real? I have some and I'm thinking of adding, but not seeing the volume confirmation. I don't think you're going to see the volume confirmations at this time of the year and with this market. I mean, we've moved up so much already, so I don't think you can expect that you're going to see volume confirmations, but yeah, I think it's for real. So KRE is the regional banks. They had broken out, they had actually broken out quite a while back, 4 bars back, right? So you had the breakout over here. You actually had confirmed here, and you had confirmed here when they broke on this time frame. The latest breakout didn't get the confirmation, so it was a reconfirming move, but it was suspect. So, it could pull back. But even though you can qualify trends, the difference between trends, bullish trends is something like, I think it's like 2.5% to 4% or 5%. I forget the numbers, but it's not huge. It's marginally better, but it doesn't mean it can't continue. And matter of fact, what you're always wanting to see is that retest that confirms, right, and regenerates you higher. So right now, this one looks strong. I mean, it closed at its highs. XLF, all of them moving higher. The financials are on fire. I don't think they're going to come back until they meet their projections. Here you've got a projection up, I think about another 2% or so. So if you take this ABCD structure and project it, right, that gives you about another 2% or so. And if you take the larger one, right, it's even larger. It takes you up a little higher. Korea, let's look at Korea, they say. Okay, so let me take a quick look at Korea. Let me go back to the world markets, and then I'll leave it at that tonight. World markets, where are you? There you are. Let's see what they're doing. So what's interesting in Korea? I haven't looked at it lately. The Kospi, where are you? There you are. Okay, so this actually looks good. Might have to look at the ETF on this. This looks good, right? Because, you know, Korea's been in this, you know, problem. It's had a problem situation now with Japan, because Japan is taking some of their market given the quantitative easing. So you had a suspect break. It comes back to do a retest regen. That low was here. So it actually got underneath it. We're talking about a weekly now. It got underneath it, but as you see, the next bar, it came right back and got into it again. So even though it broke under it, it held. What I like here is I like these two volume bars as we're coming back up. In both cases, nice spike back up. If this continues, right, that's an ABCD structure. Can take you right back up to the highs. That looks pretty good, and you left volume at the high. So I like that chart. That looks good. All right, folks, I'm going to leave it at that. It's a shortened week. Tuesday, Wednesday, I think, I haven't looked at the calendar, but I think Wednesday's a shortened day, Thanksgiving Eve. I know Friday is a half day. So, you know, you're not going to see much happen this week. It's hard to think that this market will do anything other than try to gravitate even higher. So if you're on the wrong side of it, I feel for you. If you're on the right side, well, enjoy it and have a nice happy holiday with it. Let's just see if those two weakest sectors can actually stretch a little bit more, or weakest indexes. NDX, Russell. That's the ones I'd be watching. On the sectors, it's the financials and the semis. Have yourself a great night. You take care, and I'll see you tomorrow. Good night, folks.